Righty, welcome to the weekly meeting, January 27th, 2024. Yeah, so we should start looking or expecting a correction. Does everybody know what a correction is? Who doesn't know what a correction is? Sensational. All righty, let's talk about it. Um, a correction is a sustained decline in the value of the market index or the price of an individual asset. All right. So in our cases, we're concerned about the index, the US 30, the NASDAQ, the S&P, right? A correction, generally speaking, is a 10 to 20% drop. And now that Bitcoin is kind of coming into the fold, um, it's all relative, so the correction on any of those indices, um, we need to start kind of looking for that to happen. And I'm not saying it has to happen next week, right? It may not even happen in the month of February. Maybe it will be March. I think it's fair to kind of look, if we go back to the pandemic. After the pandemic, we had one, two, then we had a pullback, and we had one, two, then we had a correction in September. And if you think about this, the market ran up to 28.4. It fell from 28.4, 2,000 points. So I think in order for us to call 28.4, if you multiply it by 0.10, $28.4 times 15%, you would have needed a 4,000 point drop. And we only got a 2,000. Okay, it was 29.41. So 29.2 times 15%. $29.2 times 10%. Okay, so as long as this market dropped about 3,000 points from the high of 29,297, so I guess it dropped about 9%, unless there's a wick down there I'm not seeing. Okay, it is a wick down here. So it did drop the 2,900 points. The reason that this is important is because as the market pushes up, it has to correct. And I know a lot of people will say, well, Todd, it's a big correction right here. This is not a correction because the market was going down. This was a let's talk market condition. This is a condition of the market when the market pushed down. We were in a rate hike market condition is the reason the market went down, right? Now we transition to a a market condition of a recession, or one where the Fed is not tightening monetary policy. Okay, so if investors know that the Fed is not going to hike interest rates, the market just runs wild. So the market can't just go from 33 to 43, or from 33 to, almost 10,000 points in 2 months. I mean, if it gets too hot, it's going to crash out. So there will be a catalyst for a correction. Maybe somebody will um, do a rate hike, or maybe the Fed will talk tough or whatever. Or maybe, I don't know, maybe some war will kick off. I don't know what the catalyst will be. I just know that um, the more and more that I get on the internet or listen to the talking heads, the correction talk is getting to be more and more prevalent. So, um, I know a lot of y'all didn't know me back then, but back in the day, back in 2020, when I first started trading Forex, I had a plan to make $1 million in 3 months trading the NASDAQ. So if the market hadn't corrected in September of 2020, me and my brother would be millionaires. We'd have lost it, but we would have actually made it, because all we did was we bought the NASDAQ, and we held it for 200 points. Then we close our order and we buy a higher lot, because all we understood at that time was the market was going straight up. We didn't understand that this pullback or this correction was going to happen. And as funny as it sounds, when I started trading was August 6th. So this month right here is August. I placed my first trade August 6th, and my account got as high as $15,000 before this correction hit. And all I was doing was I put $300 in the market. I bought 0-1 NASDAQ trade. It went up 200 points. I closed the 0-1, and I had a $500 account, so I bought a 0-2. And it went up and it closed 200 points. That was a $400 game. So I buy a 0-4, I think. Yeah. And then, so very fast, I ran that account up. And had this correction not happened, um, who knows? It would happen. Like if I discovered the market back here instead of here, that strategy I was using would have made me a millionaire in 3 months. So if I had got in April, by June I would have been trading with $1 million. I would have lost all that money though when this correction hit, because I did not understand how to trade the correction, or what to do in that market environment. So I kind of wanted to talk a little bit about it, and kind of understand it before somebody else uh, runs into a buzzsaw like I did. And this is like a waterfall. We were losing like hundreds, 400 or 500 points in a day. Then it would retrace, it would buy back up. So mentally, I would think, okay, Now, that was just a rough pullback. But if you look, man, this is a 2 month pullback. So it pushed all the way down, then it pushed all the way up, then it pushed all the way back down. So you were getting wrecked if you were a novice like I was. And I got absolutely destroyed, um, in that market. And it turned me off, about the indices. And, now in November, in that presidential election, I made a bunch of money that night trading with Ruby. But she had to beg me to get back in that uh, NASDAQ because after getting killed like that, it just kind of turned me off about trading the indices. But they're great to trade when it's one way. Like these last 3 months, if you traded the indices, you could be fooled into thinking like, man, this is easy. You get lulled to sleep, and really the market makers kind of depend on you falling asleep because that's a lot of liquidity that is provided for the big fish. Um, I don't mind seeing the imbalance. I don't mind seeing it because this is basically this is a push. This push breaks this high, so you want to see the imbalance, right? You want to see the imbalance that breaks the high. So you want to see it run, then trade back into the imbalance that caused the high break. So maybe uh, we push up for the rest of February, and maybe in March comes the pullback. But just be aware that that pullback uh, is coming, and it will be in the disguise of a correction. You guys have any questions on that? There's an imbalance here too, so I would expect these imbalances to remain open. These, I mean, if you understand the concepts that we trade impulse move. The impulse move creates an imbalance. We break an old high, then you would expect the market to trade back into the imbalance to go higher. So I don't have an answer or an estimation for how high we goes before we start pulling back. But what I can tell you is if you listen to any of the talking heads, and you kind of do that with a grain of salt. But if you listen to those guys, um, most of them will will tell you if the US 30 reaches 50K, then we're going to have a reverse crash. So I would think that somewhere in the 40s, who knows, maybe it's the mid 40s that that we will experience a correction, right? A pullback. Um, if you're late to the call, I was saying that starting next week, we're going to do a 2 or 3 week dive into the COT reports, and that's the commitment of traders report. There's a lot of those guys, the big traders that rely on that report especially when it comes to commodities, gold, oil, and the index funds. So we'll start um, getting into that. And for those of you who want to know, um, if you go and just type in COT report Forex, um, there is a bar chart presentation. So if you go and you look at these, this is the organization that publishes the reports. So if you guys look at these type videos, and some of these videos are kind of long, so I get it, but this is a 10-minute video. These are the ones that we'll be looking like. We'll look at this one probably next week. It's an hour and 10 minutes. It can be a little dry, but if you're somebody who trades indices or commodities, this is worth your time, right? It might give you some confluence or an extra edge. And it also gives you a sharper tool in your toolkit. This will sharpen up, how you view the coming week or the coming month. Sometimes, they publish reports every Friday, and they also publish a monthly version of that report. But we will dive into that, starting next week. And unfortunately, the video portion of that session won't be recorded because I don't want to get any more copyright violations. So just please show up next week on time if you are interested in that, because an hour and 10 minutes is a long time. Okay, do I have any questions over that info? All right. So we've made it to my favorite time, which is the end of the month. And I know we're not quite at the end of the month, but we'll have a new month that starts like Thursday, I believe is the first Thursday. If y'all want to be successful this year, if you want to be successful, I can show you how to do that. But it's going to require you to be very bored, because you might take 1 or 2 trades per month. And here's what I mean by that. If you go back to our video on the 30th of December and listen to that video where we said we were trading the JPYs, I specifically said I was trading UJ, but we looked at GJ, we looked at EJ, and we said we were going to buy those trades. I'll just go to NJ just for S and Gs. If you had fibbed this red candle, let me just trash all these, remove these drawings. So this is a candle that it ran all the way up. It ran back already, right? But I'm just going to show you how an example of how you could have been successful. So we knew that price needed to come to the golden zone. We knew there was a great chance that it could go to the 78. We would have deleted the fib. We'd have dropped down to the 4-hour. And we would have looked over here for places in our zone, right? And if I looked over here on the 4-hour, there's an order block here. There's another order block here. None of them were uninterrupted or whatever. So let me look at the 1-hour. Okay, so maybe there was a little imbalance here, but there was a big block here, which was very attractive. So I would have at least thought the price would come to this zone and probably these highs that were equal, right? So at least to 90.32. So I would have waited until the first, 29th, January 1st, the market pushed up. In this case, it went down, took liquidity from the bottom of the market, and this started pushing up on January 2nd, right? So January 2nd, this is this happens to be the day I entered a UJ trade. But if you entered this trade January 2nd, so you would have recognized this as a liquidity grab. This break of this high over here is a chalk. So you could have fibbed from the liquidity grab to the top right here and got the pullback. I'm not even going to get that precise. I'm just going to cover this swing lower here. And I'm going to run this position tool up to yay high. This is the 7.4% trade. So if you're trading a funded account, you made 7.48%. Depending on what size account you have, it's less like a $7,400 trade on a 100K account. It's half of that on a 50K account. Not a bad month, right? If that was the only trade you took that month, you would have you'd have made that amount of money, right? So you do the math. I don't know what size account that you have or you trade. If you're trading a personal account, it could have been even more juicy because maybe you're this 150 pip move, you flipped it. This is the worst pair, man. Like nobody traded that. Most of us looked at UJ or GJ, right? And we already understand the type of run that we got, right? Um, I got out way early and I still made a little over 400 pips. If you stayed in these trades, this is like a, close to an 800 pip move. GJ, I think, did end up being 800 pips. This is 719. So let's just call it 775 for UJ. I'm not even going to try to figure out what percentage you could have made. Just ridiculous. Here's another one. This was the highest one. I mean, almost 1,000 pips in a month. It's ridiculous. So, again, trade how you want to, but if you aren't getting better, this is a way for you to do it. I don't know what you make in a month at your job, but what I'm saying is, if you had a funded account and you just traded the monthly pullback, it's enough to make whatever you make at your job. I don't care what your job is. I don't care what it is. This is enough to make what you make at your job. I know. So let's look at a couple of opportunities that we're going to have trading this next block. So even if this is a bullish order block, which I don't know. I don't know that it'll be bullish order block. But if it is, I mean this is a great opportunity to trade a pullback. You already saw it went this monthly candle already went 900 pips. You saw that. 1,000 pips. This travel wick to wick is 1,000 pips. There's a 500 pip trade for you if you're so inclined, trading the pullback itself, right? UJ, I don't know if it'll be bullish. I, I'm bearish on the JPYs. If you look at that COT report from yesterday, I think a lot of the big money is bullish on the JPYs, meaning they're putting money into the JPYs, taking money away from the other pairs. JPYs will get stronger. These pairs will sell against it. Just understand that these pullback opportunities are huge, easy, easy trades. So it's an opportunity. This trade or this pair went 675 wick to wick. So wherever it stands, just figure the pullback, you can get half of this because we wanted to pull back to the golden zone. Now, this is a bearish order block. So I'm thinking also the EJ is going to sell. I don't want to get off subject, but if you're
Hey
trading,
Todd,
yeah,
so like what you were saying about EJ, right? You got the bearish order block, and it looks like for the month of January, it just bought into the bearish
yeah.
order block, and it should definitely sell. What did it buy up to?
What do you mean? How many pips?
No, like the is it the 78, the 88? I
Well,
was just curious. I can do it
of
myself.
this, or you mean from this high?
For the bearish order block,
But are you fibbing from this wick, or are you just fibbing the candle? Because
the
I just fibbed
candle.
the candle. Well,
I just
almost
did the candle.
100%. These are relative equal highs.
Okay, I don't have my glasses on. Okay.
Yeah. So if you're fibbing this down move from wick to this wick, then you're probably at the, I don't know, I would think 88. No, maybe not 88, maybe 78. 78. So price was up here, then it sold down. We broke these lows. The retracement went to the 78 so far. So, maybe what you're gonna see is us take these highs, take the relative equal highs before the sell-off. Um, you kind of have to have your own narrative, right? Um, but if you're a ICT enthusiast, you already understand kind of your setup, right? Uh, he's keen on equal highs. So if you have those equal highs or relative equal highs, then you could probably expect price to come up, take out those relative equal highs. Let me see where that was. Just have price come up, take out those equal highs, and at that point, maybe you'll look for the sell. So if price is hanging out up here and it's, I don't know, Wednesday, Tuesday, Wednesday, right? Then to me, it's that's the catbird, right?
They
That's the catbird. This is probably what we're going to look for. I mean, there's an imbalance right there too. So, I mean, how many pips is that? 100 and some pips. So when the
That's
market
nice.
starts off, it's going to pull back. Then it'll go up into that area. So let's just kind of take it from here. Oh yeah, 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 yeah. So if you're trading EJ, maybe you're looking for the up move for the first couple of days. You want to see price hanging out up here. You want to see it, get up here around Wednesday. If I see price up here, oh, bro, that's catbird. You get that position, and you're looking for shorts,
Like
and you
that.
don't have to go in here with a 3 lot position, a 0.01, a 0.02. Like, you got to understand that like this stuff, this is a monthly trade, right? Once it crosses over the 4 hour again, it's going to pull back and let you get in the trade, right? Just like this trade came back, crossed the 4 hour, let you in the trade, and sold down. See that? See how that worked? Came down, pulled back to let you in the trade. So if you fib from the top to this break right here, this came back to the 78, to let you in the trade. Then it sold right down past your negative 27, past your negative 61, all the way to your 100. So if you had taken this idea, $191 pips, 190 pips, easy money. Now, I have a video saying that price needed to come here, and it will, right? So if price breaks this high, which I do expect it to go break this high because these are relative equal highs to grab the liquidity because it's not coming back up here. It's going to sell. So I would expect for it to go up and take out that high and then head down. So if you are in this trade, you don't have to panic. It's going to pull back a little, right? Going to pull back a little. Get out the trade. Close your sell. Get you a better position when it breaks this high, or buy it up. You know, maybe you don't want to close your sell. Maybe you just want to buy it up. And then when it comes up here, you get you another position to sell. I don't, however you, whatever right looks like, right? For you as a trader, don't do it like I would do it because it would probably confuse you. But there are opportunities that are available to you if you want to take the swing route, and you don't want to jump in and out, or you haven't found success doing that. This is going to happen. This is going to be um, a good opportunity for the people who trade swing, who are long, right? And we kind of expected we knew it was going to sell because we got this break. We got the break of the swing low. It had the trade back up into the imbalance. This is I don't know, a cutout ICT trade. If we go back and we watched that mentorship 2022 video, number 3, only thing we're missing is this being a 15-minute chart. This is just a weekly chart, right? The market came up and it made these highs. This was the high. The market pushed down, broke those highs, went right up and broke those highs, came back immediately and broke the low that it just put in before it made that high. Classic. Classic. I mean, it doesn't get any easier than this. Then it trades up into the imbalance. So you have a choice. You could have took you a short, put your stop loss above this candle or above that swing high. Either is fine. And you shorten back down to these lows, right? He would tell you to take a little profit off at your low targets. But here's a good imbalance right down here. This was the move that started this run, right? Because this move right here with the imbalance broke the high. So I would want to see price come all the way back down to this level. Now, you don't have to hold this trade 2,000 pips, but Ray Charles can see that this move up failed to break this high. If you fib from this high to this low, this is a 78% pullback. Get the heck in the trade, bro. These, for all intents and purposes, are catbird seats to take the trade down to your negative 27, which is a good order block on the weekly, your negative 61, which is the low I was targeting, right? Like, bruh, the 100% is down here. This could very easily happen. We already know that, or at least I know, I'm not going to put words in y'all's mouth, but I know that this is the 1,100 pip trade. Off rip. Off rip. So if you know where you can get 1,100 pips from, then you go trade that. But this is the 1,100 pip trade. And, I don't know how you trade. Go look at some Dapo Willis videos on 1,100 pip trades. and see what kind of bag you can run up, right? Because now you already know the direction. You can get on the lower time frames, right? And you can figure out, hey, I'm going to manage this trade on an 8-hour time frame. Well, what does that mean, Todd? That means that I can adjust my moving averages, right? I can adjust my moving averages to a 9 and a 13. Or, if y'all don't believe in moving averages, if you're, and as your trade comes down, right? Obviously, this is going back up. That's why it broke through. But as your trade comes down, it goes every time it goes up and touch your moving average, sell. Every time it touches your moving average, sell. Once it starts selling, y'all. So if you got in January as it was buying, right? You got this pullback, you would have bought another position. Price comes up, you'd have bought another position, bought another position. Now you're at the top. Even if you had bought here, you would have saw it didn't break your high, so you wouldn't have been hurt, right? You would have still made profit from here to here. But you have all these positions. You have your original, your second, your third, your fourth, your fifth entry, and maybe your sixth entry. You made money on every one of them. One trade, 5 entries, no losses for the month of January. That's how all of our MT4 should have looked or could have looked, right? I got it. We didn't execute properly. So let's press rewind, and here's a new opportunity to do the same trick going down. Now, most of y'all won't do this. I got it. But I'm talking to the people, the few people who want to ensure their success for this next month. You want to ensure that you get a payout. You want to ensure that you grow your personal account. If that is you, this is the blueprint, right? It's 943. Clip it. You know, this is going to pay you money, right? So your expectations when you look at this chart quite possibly could be a double top here, right? Or you want to see price go up and take out the liquidity from the top. Then you want to see it start pushing down. Here's an order block right here that hasn't been tapped into, and it's right above the marking we made for the high. Mark the order block on this 8-hour. It's probably the imbalance on that lower time frame. You want to see price go tap in, then it's going to be time to shake. And everybody who is on the call should be looking to get paid in February. Any questions on that? Now, this is I'm going over this with EJ guys, but all of them, all their JPYs are the same thing. Every last one of them, right? Now, if it's me, I'm looking to trade the one that's going to pay the pip count. But this is a great pip count. If you had traded EJ was a bad pip count compared to GJ and UJ, but it's still a great pip count, and anybody could have made money. Hey, if you're in the challenge, hopefully everybody's in the competitions, right? I'm not going to blow my account this month, but all of us can be on the leaderboard, just trading one pair, managing it from the higher time frame, whether I don't know 8-hour, 12-hour, whatever you want to do, because all of our schedules aren't the same. I dare you to take that trade, get in it, and manage it from the higher time frame, and just sell every time it hits your moving average. I dare you. Okay. Any questions? All righty then. Okay, so here's a trade that's going to do the same thing. What are you saying, Todd? What are you saying, Todd? To all right. GCAT. I like the setup. I like that the oil is getting stronger. I like the Canadian dollar is going to get stronger. I also like the GBP. I like anything against GBP in the month of February. Anything. Give it to me. Anything against. I like the GBP chef. I love it. I love it. I love GBP NZD. I love it. You see how high that candle went? Oh, we about to get paid, y'all. We about to get paid off GBP NZD. I know y'all are, some of y'all are saying that this is a bullish order block, but I'm gonna tell you, it's a lie, is what it is. It's your eyes are lying to you.
Yeah, yeah. Get after it.
This is the trap if you think this is gonna buy. It's not. It's crashing. It's crashing hard, and it's giving you catbird. This is catbird. This is what it looks like. This is another 1,000 pip trade, y'all. And I know some of y'all don't understand, but you will. Price came up, gave you a high, broke that high, came right back down, broke the low. Go look it up. This is the monthly setup for the ICT joint. Trades back up into the imbalance, drops. All we're doing is pulling back, man. Like you can look at this on a 3 month, right? We broke this low. That's a chop. We just pulled back up. Relative equal highs. Bruh, get you some of that catbird. And we're gonna tank. And for y'all who don't believe that you're gonna tank, go. Who thinks that the British boys are raising their interest rates? Because the British boys got an interest meeting on the first, right? Leandro, you on the call? Cooking raw with the Brooklyn Ball. Any Great Britain? I mean, any Londoners on the call? January 30th.
Don't be scared. Come on
Oh
up.
yeah,
What
yeah. That's what I'm talking about.
must be at work or something.
Wale is on it. You knew though. I don't expect you to be on top of this or know this yet. But there's an interest rate decision coming out, and the U.S. has the hottest economy. They're forecasting leaving the interest rates the same. So if you don't raise interest rates, your currency is going down, and I expect them to follow suit. I expect this currency to go down. Um, so we can go and we can look at every British pound candle that rallied this month. Um, that's not the right measurement. Every one of these candles, they had a great month, right? They're all gonna give it back. 842 pips. I'm not trading GU. I'm not trading GU. GU's been trash. It's going to fall, but I'm not trading. There's too many great opportunities. GA, GN. In this thing, I pointed out the inside bar on the weekly chart. If y'all were looking at the chat yesterday. 808 pips. There are a lot of pips to be given out. This trade right here, much in the same way that GN trade, it took the liquidity from these highs already. This is the catbird, right? You get in this trade here, it's going to go all the way down here. This is the imbalance that we chase. 1,100 pip trade. Yo, y'all, look here, man. Even if y'all don't believe me, please press the record and just watch. Just watch. Watch it melt. Watch it melt. inside bar on the weekly. Ugh. I would like to see the candle go up and take the high, close out this imbalance right here, and sell. If I see it take this high, I'm getting in immediately. On site, baby. It's on site. And we selling it down to this area. 1,100 pips. All I'm gonna do once I get in this trade, I'm going to that 8-hour chart. I'm telling y'all now. I'm going to the 8-hour chart. As soon as I get in that trade, it's gonna cross over on the 4-hour. And when it pulls back on that 4-hour, I want to come up here and take this high. I want it to cross on the 4-hour like it does here. I want it to pull back. Let me in the trade. Then I'm gonna bring all my friends and put them in the station wagon with me. And we going on a family trip all the way down. That's how I'm gonna kick it. These opportunities, man, they're here for all of us. So if if you don't believe, make sure you at least mark your charts and look at them. Okay. We've talked about oil. Ugh. Ugh. My account getting heavy with oil, y'all. We talked about this. This was another opportunity that, I've kind of, sometimes I feel like people didn't take it because I talked it up too long. I think I started talking about oil at the end of November because I saw that on the 3-month chart that we tapped into a bullish order block. We had a bullish order block. This candle came all the way down and tapped in. Just imagine if you were a type of person at the end of July said, hey, man, we got a bullish order block on oil. I'm going to sell this down to the order block. Rich. I wasn't that type of person. I wasn't that type of person. But now, because I saw the error of my ways, I'm not going to repeat it, right? I'm not going to repeat it. I'm getting in. I've been loading up with oil. So once it comes up here and you're paying, once you start paying your $10 a gallon, then you'll wish you bought oil down here with us. But yeah, so oil is a buy and hold for me. I know some of y'all buy it and get out of it, but it's a buy and hold for me because I want to enjoy the weight of that oil in my account as it pushes up. We talked about the indices, the US 30, the need of a correction. It didn't pull back. But I want to tell y'all, or I want to bring something to y'all's attention because I think that this is very important going forward. Maybe there is a good reason to leave that imbalance here, but going forward, was it GN, y'all? GN, maybe it was GN. Last year in June, when this 6-month candle closed, I expected GN to come down here. And what happened was when July opened up, price started pushing up. And even me at some point, I said, well, maybe that just doesn't work. Maybe, and it's a lie. It does work. Just because it pushed up first doesn't mean that it wasn't going to come back and pull back. It just pushed up first because the market was going to sell off. And once it started selling, a few of us took advantage of these big moves down. It just didn't make it to the zone. We knew it needed to pull back because it had been selling, the last 3 or 4 months. Now this was the pullback. Now you're going to see another wick as the price pushes down right into our zone, right? If I put the fib back on this candle, I need to remark where my 78 was. So this was where my 78 was. So price, I would expect push into this area and maybe even as low as the 78. And I know you can't see it right now. And maybe if you never looked at this, you'd be like, well, dang, Todd, it looked like a rally-based rally. And what I would tell you is this is why we don't trade candles that are still forming, is because if you try to trade a candle that's still forming, you can get yourself in trouble, especially if you thought this was going to be a rally, because this is definitely going to drop. Y'all have any questions?
In Fuego. And what's so funny is that it's setting up to do the opposite of what it did last year, because people will go, okay, I remember what it did last year, so I'm gonna go with what it did last year. And then it does the opposite. It's just like really the market anyway. The market was so bullish last year, and now we're at a pivot point. This year, you're going to get that pullback at this time. Last year, it was bullish, bullish, bullish. Careful. You have to be intentional about everything.
I'm telling where I'm at, though. So I have the Phoenix for family friends. You said good night. Oh, East must work nights. Okay, so yeah, you just I would encourage you just to look, watch how how it changes and the market kind of moves back into our favors. But I was on here and Erica, y'all know I don't trade these chefs. Y'all know I don't trade the chef pairs, but I was on with Erica the other day and she drew my attention to this GBP chef. And this is even before I dug into the whole order block. I mean the whole interest rate thing, right? But she told me she was watching this pair because it had pushed back into the order block, and I'm like, who watches chefs, man? Like, I guess she hung out with Elfie or whatever, and they got on that chef train. But the trade lines up, it pushed right up into the order block, and she was telling me that it gave her sell signal. And what was interesting is you know Erica, Varay will she'll start um running a meeting, I guess on Wednesdays uh with Rashawn, I guess. Um but she trades a little bit differently, like on a higher time frame. So she waits for a 16-hour order block. And a 16-hour order block, I'm like, man, who who trades on a 16-hour chart, But it's something that she found success with. So she got her 16-hour order block, price pushed back up. There's your entry. And voila, you're the trade is pushing down. And I asked her what was the deal with the 16-hour order block, and she like, hey, that's what works for me. Like that's her comfort level, just like my comfort level was with the 4 hour. She like the 4 hour is too low of a time frame. I can't trust it. And you got to respect people who have their their trust issues, because if her comfort level is with that 16-hour, once she got that 16-hour that broke that structure, she marked the imbalance up, boom, right there in the imbalance. Now the trade is out the door. It's beautiful. It's uncanny, to me, because the way I was teaching it wasn't on this time frame. But um, you have to find something that works for you. It's the same concept. She's trading the same concept, uh, just confirmations are on a different time frame. And it's kind of like Ish does the 1 hour thing, and a few other people, have their own time frames. We're not we're not cookie cutting how you enter a trade. We're not cookie cutting your confluences. Kim trades with trend lines. I like to see moving average. Uh, it's the same tool. The tool is the same, right? If you run a trend line across the top of here, it's going to tell you the same thing that my moving average is going to tell you, right? All I have to do is adjust for the slope of the trend to where the moving averages run across the tops. And every time we get a pullback, you sell. And even if you pull back here, you sold, you went into a little drawdown, you come right back. You're in a drawdown, you come right back, right? So trading is not perfect, guys. Uh, I don't I don't pick up my phone and panic if my MT4 or MT5 is red sometimes, right? Drawdown is a part of trading. The same way drawdown is a part of your freaking bank account. When you get paid, your bank account says some number. And then you get to paying all them high bills and buying all that crap that you buy, and your bank account suffers drawdown. Some people's draw all the way down, and that still don't stop you. So if we take the same mentality into our trading, we'll be wildly successful. And the reason why I stress that and I stand by that is because if you trade the direction of the market, if you know that this market is selling, which we do, we know. If you're selling GBP and you have a bad entry, as long as your lot size isn't too big, as long as you're not over leveraging, you're going to win in the month of February. Let me say that again. If you're selling the GBP next month, as long as you don't over leverage, you're going to win that trade. I don't care if you got to hold it for 8 days before it turns green. Hold it 8 days, man. It's 8 days. It's a week. It's not your life. It's a week. And this is how you'll be successful. JPYs, that just like they bought all last month, they're gonna sell this month. These are opportunities that we may not have recognized a year ago, but these are opportunities. Just think about this. If we had traded January properly, you got 8 wins or 8 entries on your MT4 or 5 that are all heavy and they're all blue. I believe we call that Smurf Village. If you're this month, you could do the same thing. If you ever listen to those people that talk on the TFT website or YouTube or on the My Funded FX, and they all, hey, I got this withdrawal. Hey, what's your strategy? How do you do this? How many trades do you take? And they say 4. Hello, yeah. This is the 4 trades that are going to be on your MT4. The 4 entries or the 5 entries or the 7 entries every time it bangs and you sell. There is your path to a passing scenario and a withdrawal this month. Any questions? This is your path to doubling or tripling or quadrupling your account in February, in the short month. Do you have the patience to wait 3 or 4 days? Maybe, maybe not. Any questions? Anybody have a question about, does everybody know what they're trading, first of all? Does everybody know what they're trading? Do you have a trade next week?
GJ.
Any of them JPYs. I mean, that is good. If you don't, if you need, if you need help, this now's the time to say it. Everybody got a plan until they get hit in the mouth. You know, like this is where where you're gonna make your money by looking at and understanding your trade setup while the market is sitting still. Then once the market starts moving, you can make the money. Everybody good.
Yeah, understanding volatility and being in the heat of the moment. You know, nothing is really happening. I mean, you can really just sit there and let it move and let it go towards the advantage. When we say take the trade, and if you don't over leverage, it doesn't matter which direction it goes. Eventually, it's going to go where it's supposed to go. Where's the psychology at that point? There is no psychology. You just enter the trade. Now, do you even want to do better than that? That's like when the market opens, everybody's waiting for the market to open so they can hit the button when you really don't need to hit the button. You need to let it go to the advantage point, then hit the button. And still use the same idea, not over leveraging, just catching the trade itself. You can do everything else later. You have to catch the trade now. Don't just go in the market and just hit the button. Let it go into the advantage point, then hit the button. How do you find the advantage point? By going into the beginner's course and learning where that advantage point is. And then you win. Every time. It doesn't matter how long it takes. We want the money now. No, just catch the proper trade now. Then you win. No psychology.
That's on the money.
On the money. Anything you want. Indices, currencies, metals, crypto. You can do it in anything. Stocks. You can invest because you know where and what time. Because you're patient, you're waiting, you know what you're looking at. You take advantage when the advantage presents itself. It's a chart. It's going to give you your advantage. You wait for it. Every day, every camp. Yeah.
It should be some accounts that get flipped, this coming month.
Yes, sir.
I mean, there are a bunch of opportunities, and it's not every month that we get markets that move, 800 pips in a month. Those are great trading opportunities because you're guaranteed half of that on a pullback. You don't need half of 800 pips to flip in a personal account. Once you get the account to the level that you want it, then you don't have to flip. You can just do percentages at that point. But getting 2% from a $500 account is probably not going to do much for you. So it's easier to flip a $500 account than it is to take that approach with a 50K account. Even though it can be done, but it just takes your kahuna's got to be on a different level once the money gets a little bit bigger in your account. But in any one of these scenarios, if I got a $500 account, I'm going $5 a pip. If I get a 400 pip move, right, I got a $2,500 account now.
These are the facts.
And the key is I just wait to get my entry signal. And my personal entry signal is when that candle closes below that moving averages on the 4-hour chart. I'm in on that pullback and I'm riding the wave. I'm just swag surfing at that point. I'm taking the trade to where it's supposed to be. You know, once you're in the trade, you move to your management time frame, which should be higher than your entry time frame. And whether you're drawing a trend line and trading the trend line bounce, or you have your moving averages, you know, those will keep you in a good position to manage that trade. All right, if y'all don't have anything else, then we can get off the call.
Yeah, we had a pretty good week, so this week should be pretty awesome. The activity is pretty pretty spread out. A lot of good information coming out about personal trades. A lot of people are catching the same entries. That's how it's supposed to be. Like we all do the analysis for a reason.
It's gonna be on and popping, y'all.
Yes, sir.
Just you know, if your account got bigger in January, that's a win. If it gets bigger in February, that's a win. And you know, if you didn't know how to grow it in February, we just gave it to you. Just gave it to you. You know, there are several opportunities: JPYs, GBP, you know, EN, EA. You know, they're great opportunities, guys, and you know, it will be very nice if you just take the opportunities that present themselves. Don't get greedy. Don't overtrade. If you don't see an advantage, don't trade. You know, that's in my opinion the way you stay on top and the way you grow. But I guess I'll go in here and get in this garage. Get on these weights. Get my mind right.
All right, man.
Next week we're gonna do
Appreciate you.
Yeah, next week we'll start the dive into the COT reports.
Yeah, that sounds pretty interesting.
Yeah, it's a lot of info.
Okay.
Thank you, Todd.
All
Thank
right,
you.
Queen Elfie.
Thank you, Todd. Have a good weekend,
Thank you,
everybody.
Todd.
All right, y'all.
Appreciate
Y'all
it.
have a good one.
Thank you.